Welcome to The Explainer. Today, we're cracking open what might initially sound like a pretty dry government document, but trust me, it's actually a fascinating and incredibly powerful piece of text. We're diving into the Financial Management and Powers of Principal Accounting Officers Regulations 2021. Instead of thinking of this as some boring manual, think of it as the ultimate corporate playbook for the government. It strictly dictates exactly how every single taxpayer rupee is managed, spent, and audited across federal ministries. Really, it's the absolute blueprint for financial accountability. Here is our agenda for today. First, we'll meet the Principal Accounting Officer. Then, we'll look at the Chief Finance Officer. Third, we'll dive into budgeting and managing funds. Fourth, we'll introduce the Chief Internal Auditor. And finally, we'll wrap up by understanding delegated financial powers. Let's get right to it. Section 1. Meet the Principal Accounting Officer. We have to start at the very top of the hierarchy, with the ultimate authority figure in this whole financial ecosystem. Basically, we're talking about the CEO of a government ministry, the Principal Accounting Officer, or the PAO. Usually this is the secretary of a division. Now, the PAO isn't just a figurehead signing off on paperwork. Not at all. They are the primary custodian of the ministry's financial resources, and that includes any subordinate offices. And here's what makes this role so incredibly heavy. They are directly accountable to the Parliament of Pakistan, including all the relevant parliamentary committees, for the regularity, propriety, and transparency of absolutely every expenditure under their domain. The buck literally stops with them. There's this brilliant quote in the regulations that perfectly captures the golden rule of public finance. It mandates that the PAO and everyone operating under them must treat taxpayer money with the exact same caution, care, and prudence as they would their own personal bank account. You wouldn't just throw your own hard-earned money away, right? Well, this is a powerful legal mandate against waste and inefficiency, demanding everyday common sense when it comes to high-level public finance. Section 2. The Chief Finance Officer. So with the PAO answering to Parliament and holding all that ultimate responsibility, who is actually handling the day-to-day spreadsheets and the real financial strategy? Well, enter the Chief Finance and Accounts Officer, or the CFAO. Think of them as the CFO of the ministry. They're typically a highly ranked BPS 20 officer working directly under the PAO. And to make sure they maintain complete independence and strict financial integrity, they're posted for a strict, unextendable term. They aren't just processing paperwork. They are the analytical brains of the entire operation. Now, you might be wondering, how much power does this CFO actually wield when it comes to the massive, complex machinery of government funding? Are they just sitting in a back office tallying up receipts at the end of the month, or do they actively steer the ship? It turns out they do a lot. The sheer breadth of the CFAO's responsibilities is pretty wild. They touch absolutely everything. They coordinate the entire budgeting process. They're tasked with proactively seeking out investment opportunities to actually maximize returns on government funds. They even have the authority to shut down rogue commercial bank accounts to ensure money flows properly into the centralized Treasury single account. I mean, from tracking non-tax revenues and fighting legal financial battles, all the way down to conducting annual physical stock takes so office assets don't mysteriously disappear, the CFAO is the one keeping the gears turning. Section 3. Budgeting and managing funds. Let's look at how all this builds into the actual flow of money. The regulations lay out a very strict timeline to prevent hoarding funds or going on reckless end-of-year spending sprees. The absolute finish line, May 31st. By that date, the PAO has to reappropriate any funds within their budget to cover shortfalls, or they must surrender all anticipated savings back to the finance division. Simply put, you cannot keep what you don't spend. But in a pretty smart move to incentivize honesty and good planning, if you surrender those funds, the finance division might actually reapprove them for your next year's budget, specifically for development projects. And speaking of strict fiscal discipline, there's this fascinating rule aimed directly at preventing government bloat. If a government post remains vacant for 3 consecutive years, it is automatically deemed abolished. Just like that, it's gone. The secretary can't just quietly revive it later on. Bringing that post back to life requires prior explicit approval from the finance division. It's essentially an automated mechanism built right into the playbook to continuously trim administrative fat. Section 4. The Chief Internal Auditor. Okay, so we have the person spending the money and the person planning the budget. Now we need to introduce the watchdog of this corporate playbook, the person keeping everyone honest. Meet the Chief Internal Auditor, or the CIA. This role is basically the Chief Compliance Officer. The CIA develops annual risk-based audit plans and independently reviews all internal controls across budget, revenue, and expenditure. If they find something seriously wrong, like major deviations from the law or any financial impropriety, they report those findings straight to the PAO. No middlemen. When you compare them side by side, it's a brilliant system of checks and balances. The CFO is the planner. Their core focus is making the budget work, managing the cash, and getting bills processed efficiently. But right next to them is the CIA, the watchdog, whose entire job is to evaluate the risks of those actions and make sure internal controls are absolutely airtight. And because both ultimately report up to the PAO, the principal accounting officer gets a complete 360-degree view of both their financial strategy and their legal compliance. Section 5. Understanding delegated financial powers. Finally, let's break down the specific rules of the game. We've met the major players, but what are the actual authorities that dictate their everyday operations? Imagine a department's servers crash or a sudden emergency hits. How is that everyday spending actually authorized? Can a department head just go out and buy a new fleet of cars? Can they approve massive medical bills on a whim? Let's look at how the playbook categorizes these everyday spending powers. Instead of a free-for-all, there are strict logical groupings. For operational must-haves like IT equipment, hardware, and software, PAOs and heads of departments have full powers to keep the daily work running smoothly. Medical reimbursements also carry full powers to ensure employee welfare. But look at vehicles. They can pay for maintenance to keep the existing fleet running for sure, but buying brand new cars, no way. That is strictly gated and requires explicit finance division concurrence. During a declared disaster, PAOs get urgent relief powers, which they can regularize after the fact to ensure quick responses. It's a system designed to be agile where desperately needed, while heavily restricting categories that have a high potential for abuse. But hard limits apply to almost everyone when things fall outside the standard planned budget. When truly unexpected, unforeseen costs pop up, heads of departments are strictly capped at spending 100,000 rupees. For heads of subordinate offices, that limit is even lower, just 50,000. It proves that there is absolutely no blank check in the government playbook. Even for emergencies, the limits are very real. And you'd be amazed. This level of detailed micromanagement extends to the absolute smallest line items. Even the tea and biscuits served at official meetings are heavily regulated. To spend public money on light refreshments, expenditures cannot exceed a very specific per-person amount set down by the finance division. Plus, they actually require a verified attendance sheet with names, designations, and signatures just to process the bill. All of that just to ensure public funds aren't wasted on lavish, undocumented hospitality. But of course, no corporate playbook can predict every single crazy scenario the real world might throw at a government department. So the regulations include a catch-all. Ultimately, the buck stops with the principal accounting officer. They hold what are called residual powers, which means they can exercise all necessary financial powers not specifically mentioned in the schedule to keep the administrative business running smoothly. The only catch? They have to stay firmly within the bounds of the overarching Public Finance Management Act. So I want to leave you with this provocative thought. Behind every single headline you read about government spending, there is a highly structured playbook of PAOs, CFAOs, and CIAs operating under very specific, rigid rules. As citizens or public servants, understanding this intricate rulebook is the ultimate key to holding our institutions accountable. So, who is truly holding the public purse strings? Thank you so much for joining me to demystify the FMP Regulations 2021.